Everyone and welcome to another Elliott Wave forecast video. Okay, my name is Eric. Today is the 10th of February around 4:30 p.m. Eastern Times. And here we go, guys, with another technical video or another video in which we explain one of the instruments around the market that we don't cover. We cover 78 instruments in Elliott Wave forecast. But from time to time, we do video blogs in which we do a technical analysis of an instrument for free to followers. Today, we're going to take a look at Inter. And Inter right here is this is the monthly chart, and within the ground super cycle, finish a cycle in 2000 to the outside from the ground super cycle from zero, finish a cycle in 2000, and then Inter it dropped into the 2009 lows. And then the band is enforced. If we can take a look, there is separation right here, which is for an impulse, and it should continue. Now, what is an impulse? In any way, an impulse is an advance in 5 waves: 1, 2, 3, 4, 5, in which the main identity is that wave 4 do not overlap wave 1, that wave 2 cannot break below this, and that wave 3 cannot be the shortest. Those are the main groups or identities of an impulse. But it's very important that there is no overlap between 4 and 1. As of right now, in this chart, Inter is doing an impulse from here. And for now, we are suspecting that from the all-time low, let's say 0, Inter is rallying. And for now, an INTC looking into the 88, right here, 88 to a 106 target. We believe that Inter is gonna trade higher into there, right? Inter is gonna trade higher into that area. That before they're gonna be a series of pullback, which are another opportunities to buy. Now, this is Inter supported to make an ABC from the all-time low into 87.97 target. Now, I want you guys to look at 2009 and 2018. And I'm going to give you why reasons that we believe that it's going to trade to that point and how should be oscillating. This is the S&P, and this is 2009, this is 2000. And Inter, this is 2000. So the cycle from 2009 in the S&P is showing a 5 weeks advance, and soon it's going to pull back in 3. When that happens, that will affect Inter in this wave 4. Now, my question that you guys may ask is, why is a target at 88? Why it should be breaking this high? First of all, most of the world indices already have the 2000 peak. But there are some that, like Inter, hasn't reached the blue box target from the all-time lows. In that case, you have, for example, the Australian Ordinary. This is the all-time lows. This is the 2007, and this is the 2009. Soon a pullback and higher. And this is the S&P with an enormous extension within the 2009 cycle compared to the 2000. So we believe that Inter, which is doing an impulse, and we believe that Inter that is doing an impulse and is doing a mess from the lows 1, 2, 1, 2, 1, 2 with the separation here. Soon, like the S&P, when the S&P ends the cycle here from December right there of 2018, the Inter is going to pull back. The December of 2018 in the S&P is nothing more than this October of 2018 in Inter. At this stage, we believe that Inter still can be part. As of right now, we label it as a little no regular count, or a little bit tricky from this low, because there is separation in these lows over here between these two low and this high. There is separation, and it can be the case that we end in the cycle from here May of 2019, or even the August cycle, which is the one that is being ended soon in the world indices. Regardless, the move from October of 2018 is in 3 weeks, and more outside should be taking place. As of right now, the grand super cycle target is 38. Now, in this cycle, the target comes around, I would say, sometimes around someplace between 70 to 81, and a pullback will be taking place. But when we look at the shorter cycles of Inter, we still should do a wave 3, a 4, another wave 5, another big 4 over here, and then more upside. As of right now, at least if we count the swing from here, we can have 1, 2, 3, 4, 5, 6, 7, 8. We need 9, 10, 11, 12, and 13 minimum. At least a 4 and a 5 should be taking place into, like I say, an area around 70, 04, or even a little bit higher. But the extension should be taking place in Inter, and if it breaks in the shorter cycles, if it breaks lower, the next buying area will be around 61.77. Buyers should be waiting there, and market needs to decide if it's going to trade like this, or if it's going to trade 60, if it's going to trade someplace around, like I said before, 62.59, and one more highs, and then the pullback back over here. Overall, 3 weeks from December in Inter, 3 weeks from December in the S&P. More cycle within that cycle should happen. Then sometimes in the summer of this year, a big 3 weeks back in the S&P, and also another big 3 weeks back in Inter. A very technical market with a very defined 87 and 100 target, sometimes into the future. So for now, we have to keep buying the dips and Inter in degrees related the degrees, and then you should be a successful trade right here. What we do not recommend is selling Inter, because we believe that still is going to look for 88, 100, sometimes in years to come. But before, we're going to have a dip in wave 4 right here, and possible another dip in another wave over here, something like this within the grand super cycle. Very technical trade overall, very simple, no reason to be in the wrong side. If you like this video, as we always say, we have a promotion on gold for 50%, and also you can take the free trial here, which is free for 14 days, no commitments. We cover 78 instruments across the market, but also we do present videos that we provide here for free, like NVIDIA, Dollar Switch, a lot of things that we do for free that we cover more inside the members area, and which are the 78 instruments and 4 different time frames. This is all for today. I hope you guys enjoy the video. Have a good day, everyone.